I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So world markets are lower, with Europe breaking its win streak and Asia trading off across the board as fears of Fed tapering get louder. The uprising in Egypt continues, obviously spilling over into our markets as our futures are down about 8 to 9 handles.
Yeah, there's just a lot of things going on that's adding some fuel to the growling of the bears. You know, I wouldn't say, you know, the overseas markets are the only problem because, again, Europe's down today after being up 4 or 5. China was on 10-week highs, so they're on their second day of the pullback. And Japan has been trying to just hold this area, which, you know, it's kind of, you know, inconclusive on what's going to go on there. But, you know, you put that all together with some of these earnings news releases that we've been seeing, and it's adding a little punch to the fight of the bears.
Yes, also pressuring us this morning is weakness from Walmart and Cisco in their reports. Let's start with Cisco, which of course last night announced the layoff of about 4,000 employees as well. Yes,
and this stock was priced for perfection. If you look at the chart here of Cisco, you will see that, you know, it wasn't a value play like it was talked about last year and last November. Now it's been firing on all cylinders all the way up to almost 2013 highs. So for them to come out and say they're going to, you know, lay off 4,000 people and, you know, a lethargic or unknowns around the world, you know, the stock's right now heading to 24 or right around here. So if you don't take stock into earnings, which is something that we don't do, you know, maybe you have an opportunity here at 24, or maybe, you know, over time if it comes and tests this gap. But basically, what you're going to want to see, does Cisco open down here and close off the lows, or does it open down here and see a gap and go to the downside? And that'll help give us some clues on what type of action we're going to see today.
Yes, and this morning's report from Walmart is also pressuring us this morning. They had a soft report. Where is support there?
You know, it's interesting with Walmart. I think they're attributing it to the payroll tax cut, as well as higher gas prices, showing that, you know, some of these things that go on in Washington actually do affect, you know, the common individual out there. Because, you know, anyway, with that said, you know, this stock is down, so it's pressuring retail. You look at the chart here, you will see the 200-day moving average in Walmart is right around 74.89. I do think that this is opening somewhere around here. So this one wasn't quite priced for perfection like Cisco. So we'll see if, you know, the 200-day holds. If you wanted some exposure to Walmart, you know, and you don't take it into earnings, you know, into this area, I do think, you know, you nibble a little bit. And again, we'll see how fast it could bounce by whether or not it opens lower and closes off the low, or opens lower, you know, and closes on the low. That's how I figure out whether or not these stocks need to be in the penalty box for a short interim or for a much longer time frame.
Well, there were signs that we were weakening, right? There were clues we could have picked up on to take some risk off. We're going to check the temperature of the various sectors and look for some support levels there. Let's start with the financials, which is trying to hang in there. What is the key level there to watch today?
Well, I think the financials that have been holding up, you know, they're going to give us clues whether or not the actual S&P could break that head and shoulders top pattern. So first, before we get into that, I just want to show you the chart of the S&P because I do think it's very important. Okay, here's been that trend since November, okay, which is very smooth. Then the trend that we typically trade as active intermediate traders, the accelerated trend. Look, that broke once, but held this one, and then we had a very nice spirited rally up to this upper area. And we've been talking about this floor in the S&P and in the spiders. Okay, and right now we're knocking on that door. We are opening actually below it. Here you go. You want to take a close look? This is that head and shoulders top pattern that I've been talking about here and there on Twitter, on our virtual trading floor. Yesterday we closed on our lows, so some momentum traders are probably net short, so they're actually kind of excited with this down open. I'm actually net short, so for me, I was looking for this type of move. So the question is, do we close and break below it, Or like the last few times we opened around here, do buyers come in and close us off the lows? So here's your level. This is what, 1682. This is 1676. So, we are right around there now. If, I would say within the first hour, perhaps, we do not reclaim this, then ultimately, or close below this, we could see a move down to the 50-day moving average, which comes in right around 1655, which, August, September tends to be one of those time frames. So, at this point, you had the opportunity to take some risk off here. If we remember talking about at 1698 when we couldn't hold this breakout. So now, with that said, this type of action in here was showing us, some bearish signs, especially considering, some of the things we've seen in some of the sectors we're about to go over.
Right. So now if we go back to the financials, the XLF will be important to watch today to see if it has a potential effect on the S&P.
Yes, yesterday the banks tried to be strong all day while the market was weak. I tried to be long JP Morgan, I got stopped out. I put Bank of America back on, it was green, but still, when the tide goes against you, these stocks that have come a long way are also going to go down. So the question is, do they get hit? You look at the XLF and you will see that this is the support here, okay? Still high, lower high, another lower high, not able to reclaim this area. I thought perhaps, if we were going to get going, the financials would have to lead, and they tried, but they just didn't have enough. So if it breaks below 2024, the 50-day moving average on the financials is 2007.
Right, and another sector that we could have looked to for signs that we were weakening was the Homebuilders, which did break below its 50-day. So what would be the key support level now in the XHB?
Looks like the 200-day. So it's kind of with the thesis that sometimes, during the course of 2013, you haven't seen, a 10%, or you haven't seen the actual S&P get to the 200-day, but there's been rolling corrections among sectors, and this used to be strong, and now we're almost getting used to seeing it a little weaker. Let's see if it adds to the negative psychology. You go look at the Homebuilders, the XHB, you have your high, two lower highs, another lower high, now it's breaking below support. Okay, with that said, the 200-day comes in right around here, so I would say 28.48 is pretty big. If it breaks below the 200-day, and my rule is if it breaks below and can't reclaim it in 2 sessions or so and continues lower, then you know that this weakness is not going to be ignored and it will spill over into some of the other indices and groups.
How about the transports, where we've seen some weakness as well?
This too, looking a little toppy here, plus all the news on the airlines. So some are saying that the move in the transports are going to be short-lived to the downside because, the Justice Department is not going to be able to block the merger. But anyway, with that said, it's coming into support. It's already near the 50-day. That is around 114. See how it handles this area, because if it doesn't handle this area, your next big spot isn't down to 110. That's quite a ways down.
But then retail, on the other hand, has been strong.
Yes, but now we've started to see some news out of Macy's, negative, Walmart, negative. So we'll see if that could hold up. And if it can hold up, again, just like the financials, that'll add, maybe a few, nails in the coffin of the interim bull for now. So look here at the XRT. You will see that, this also really big move, but up in this upper area, it's starting to get a little bit wishy-washy. Okay, here is major support in the XRT. So as long as it stays above this, I don't think you have much to worry about. But if it starts breaking below the 8 and 21-day moving average in this little line here, which is about, 80, 87, you could see at least a move to here. And you know what? These corrections are actually healthy. People want to buy the dip. It's just a matter of sometimes, be careful what you wish for, because if a dip turns into a bigger dip, you just want to make sure you're getting back in at the right levels.
Right. Well, in a down environment, gold and silver tend to act better. So coming up, we're going to go in the trenches with the metals and see what the opportunity is there. But first, this quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with the metals. Let's start with silver, which actually had some nice follow through yesterday and has been acting a bit better.
Yeah, and it shows you that you can't go to the well and look for that extra move lower, because when these metals got hit in the end of June and the blood was all over the street, I remember saying with silver that I think that silver is a better buy between 17.5 and 18.5 versus sell. And if you look at the chart of silver, there were some sell signals along the way. Up here, this was a sell signal when it broke this range. This was a sell signal when it broke macro support. So down here, if you weren't involved, you had some opportunity. You had some opportunity to say, you know what, let's see what type of move off these lows we could have. So right here, you know, this was, I think, the sessions we were talking about it. You didn't even have to accumulate it. You could have waited for it to ignite above this 1830. And then from there, it's been pretty methodical, a little choppy, but if you just said I'm buying versus slow and you positioned it as a swing trader, look where you are now. Plus, you know, as a momentum trader, you know, some guys would have taken it long here, you know, when you broke above a descending channel here. So now with that being the case, it's had a big move. It's already filled this gap, but actually, you know, this is almost like an island bottom, some would call it, where you have a gap down, they leave all these people stranded, and a gap up. So at this particular point, you know, next real level here is closer to 22, and then the moving average, or the 200-day, doesn't even come in all the way up to here. So at this point, it's in motion. You know, if you're positioned well, just trim and trail along the way and measure your time frame.
And gold's been a little choppy as well. It had a nice gap up on Monday, then retraced lower on Tuesday to fill the gap to the downside, and then woke up again yesterday. So maybe we'll get follow through today. What are the levels you're watching?
Well, gold, you have to look at these things like very active and very scalp focused, or you get in there, you have a level, you have a plan, and you say, okay, I'm going to give it till this. So again, in 2013, gold was in a major downtrend. Lots of areas to sell, lots of areas to maybe even short. You look at the chart here of the GLD, you will see this symmetrical triangle right here. I didn't know what was going on, and all I know is, you know, it broke 160, so that was an intermediate sell signal. Then once it broke this 150, that was a macro sell signal, because you go back and look at this weekly chart and you will see, you know, what it aligned to. Look at the support here that it broke, that even if you were a gold bug, you could have made some adjustments right there. So with that said, you go back to the daily chart, and you know, once it hit that blood in the street low, which was a term that I used, and I'm sorry, it's a bad visual, blood in the street. But anyway, with that said, here's a red dog reversal, a little bit different than that pattern in silver. Broke below 115.85, came back above it. That could have been your long entry, and you could have said, okay, I'm not going to sell it unless it breaks that low. Well, it never broke that low. Here's a higher low. You know, and if you traded it intraday or every few days, there's been some follow through. You know, recently I started to get refocused on it right around here. I'm long some gold, and I think that, you know, you get a close above this 130, the macro guys will feel a little bit more comfortable that perhaps we could see a move to 135 to 140 in gold. I am not a macro guy in gold. I am a gold trader here and there.
Well, could the miners be a better bet, because the GDX has actually been leading?
Well, yeah, they have been leading. They actually led that day with silver on that scenario, but then they kind of take turns, so you can't like put all your conviction in on what's going on here, you know, here and there. But you look at the miners yesterday, and they had a nice move. It actually broke that level before gold. You know, just say the level in gold or the GLD is 129.5, 130. You know, the miners are already above it. Okay, and remember, this looks very similar to the silver chart, right? It didn't make a new low. It rallied, made a higher low, and then since then had a move. It probably stopped some people out around here when it started to look like it was going to fail. But then here it ignited again, and now that's where it is. And you know, why not 30 to a little bit higher? Just again, trim and trail it and play it towards your time frame. For right now, it's been something active and something somewhat methodical for traders to go with.
All right, well, let's do some quick hits here and talk Apple, extending higher again yesterday after news of Cooperman's stake helped lift the stock through 500. Now that it's gotten through sort of that key level, where do you think it's going?
At this point, I think it needs a rest. You know, like what's the beauty about being a technician is that you could read the chart pattern and the volume and not know what's behind it, and then all of a sudden something comes out like Carl Icahn getting involved or Cooperman getting involved, and it gets a little extra juice, and you were already there because it was technically acting well. So with that said, you look at the chart of Apple and you will see, you know, I started going over this lower area very closely recently. So with that said, you know, a few things here. First of all, this was your double bottom. Okay, I remember being in the Hamptons or on my way out and everyone's like, oh, look at the Red Dog reversal in Apple. I missed that, but then you could have bought it here once it crossed a slower pivot. Big move, some commitment. The real exciting point was when it gapped up after earnings. You had about 3 days worth of consolidation. Could have bought a little bit here, or when it added through this downtrend. Gave you a nice move, pullback. This was the day that they announced the invitation for September 10th. That was the day I re-entered Apple. You could have bought more when it took back the 200-day, which is always a technical good sign, and then boom, the news that Icon and Cooperman are involved, and here we are. We were up above 500 yesterday. So the question is, what now? So if you look a little bit closer, here's what's now. You have a doji, you have a point of reference right here, right? This low is right now 493. If it were to break below that, I'd like to see it at least hold, 485. 485, I will be looking to buy that dip. If it were to stay above yesterday's low and go sideways, I'll probably reposition in a few sessions and then see if you can get some more follow through above 504.25.
Well, there are names in high beta tech that are usually strong that are showing some weakness. Google, for example, grinding lower since earnings. What do you think would have to happen for you to see a real composure change here?
You just have to see it technically because, everyone was putting that $1,000 price target on it. It had an earnings report that was kind of strong, but it was priced for more. And since then, it's been just dribbling lower. Pretty much off my radar. I tried it once, when it tried to break out and look good and it failed to give you an outside day. If you want to look at that outside day, you'll see it was right here. Okay, this is, a bigger picture of it, but you want to take a close look just to show you what an outside day is. That is when something tries to break above a key level. This was right here, 907. It went to 909 and then reversed and failed and closed below the prior day low. Here is an outside day. Sometimes it happens near the high, sometimes in the middle of the range. That was probably the last real time I traded Google. Yes, could I have been shorted? Probably, but anyway, I'm not good at that. With that said, here is another trend line that it broke below. It's opening lower today. Maybe today for cash flow, you could potentially try and buy it. If it were to trade back above yesterday's low of 867, maybe it retraces. But overall, if we're going to really correct, throughout the month of August and into September, I would think with this leading the way, you at least could retest this tail right here, which comes in around 845. So I would just be a little careful here. This has been just dribbling lower with a big lack of interest.
Yep, and Amazon showing weakness as well coming into the 50-day. Where's a spot you'd look at for Amazon?
Well, today.
Yeah.
Today's the 50-day. A key stock like Amazon, will it hold the 50-day, or at least the first time, or will it break it? And if it breaks the 50-day, I think that will bring out some more sellers in the overall market. It was technically set up going into earnings. Then after earnings, it looked like they were going to get a pass again, but it only happened the day of earnings, and then since then, it's been just out of play. And you look at the chart here of Amazon, this was at 285. If you remember, we also had a nice little trade here when it broke above this 272. This was at 52-week high. And what the beauty of this is it gave you the trade before earnings. And then here was earnings. It squeezed some shorts, and since then, it's been a slow grind with, just mess all the way to the 50-day. So with it opening lower today, maybe today it tries to reverse, just to be cute in a sea of red. So with that said, here's a 50-day. If it were to break that, 285, in my opinion, is definitely worth the look to see if you could, nibble for some action there.
All right, and Tesla weaker since its earnings pop and that Barron's article, and after filling the gap to the downside is getting close to the 21-day. So is the 21-day then the level that you'll be looking at today?
Yes, and with stocks like this, momentum names, you have to watch them really closely, and you have to know when little things change so you can measure the speed and you could know how to approach it. Tesla, it's been, there's been actually two-way trades along the way during this big run, but when a stock gaps up after earnings and fills that earnings gap, that means you could see more of a retracement. And if you look here at the chart of Tesla, you will see here was that gap up after earnings, okay? Here was your 2-day range, and then it broke it. So all these shorts trapped, they got a way out. Everyone who was looking for a way to buy it didn't have to wait up here because it wasn't pent anymore, came in lower. Broke the 8-day, closed near the lows. Here's your 21-day moving average. If you look at the run it's had since May, here it touched it and bounced off it quickly. Here, it broke it and then rallied the next day. So with that being said, coming into this trend line, I would think that, if you didn't take it into earnings or you were looking for an opportunity, this could be that opportunity. So this will be, on my focus today.
All right, so the Bears officially seem to have the ball for now.
Right.
What will your strategy be as you head into the trading session?
Well, if we want to go back into the thesis of
Football.
the football game, the Bears right now are they're on the field. They're at the Bulls' 20-yard line. They have a fresh set of downs, and it's their job really to lose it, because we're opening below that key upper level. You have some lethargic action in a lot of high beta tech. You have the Egypt situation that probably will be all over TV. You have red arrows around the world, and then you also have weakness out of Cisco and Walmart. So today is their day to say, look, I'm pressuring, we can get follow through. If we open up down 80 points in the Dow and we close positive today, I don't think they're going to have that many opportunities. So they're on the 20-yard line. They have a fresh set of downs. They could definitely score 7 points for 2013, which the Bulls will be winning then about 28-7.
Wow, something to keep in mind today. All right. Happy trading, everybody. Have a great day.